Good evening. My name is Kipkorir Kelvin, a Valuation Masterclass Bootcamp student, and today I'm going to present LVMH. I initiate the coverage on LVMH with a buy recommendation and with a target price of 928 euros. This implies a 12% upside compared to the current price of 828 euros. And this is derived from by using a DCF-based evaluation approach with a weighted average cost of capital of 9.5% and a terminal growth rate of 3%. And what are some of the stories that back our assumption that we are, my assumption that I've used in this valuation is three key stories. That is the LVMH investment in the Olympic will be a revenue growth catalyst. Also, e-commerce could drive growth and efficiency for luxury goods. And also the surging China affluent, that is the rich consumers, will catalyze LVMH market expansion. But also there are some of the risks that I was able to identify that could potentially impact our target price. And these are the main one being the macroeconomic downturn, overdependence in China's affluent consumers, and geopolitical tension and currency fluctuation, and the threat of counterfeiting. So LVMH is a global leader in the luxury industry, and this is as a result of their market share of approximately 19%, which is it makes LVMH dominant in the luxury industry. And the company boasts a high heritage and also derive most of its revenue by selling 5 key products that are leather and goods, wines and spirit, watches and jewelry, and perfumes and selective retailing. The sum of the three key main stories about the company future projection is investment in the Olympics, and the Olympics are boasting a large global audience, as illustrated by the 2020 Tokyo Olympic, which had 3 billion viewers. So we see that this is going to be a strategic investment as compared to the traditional method of advertising and marketing, which require a lot of money. So compared to the amount that the LVMH are going to put into the July 2024 Olympics, so we see that the company is going to tap into a vast new audience, which will solidify its brand image and potentially drive significant revenue of 10% on average. So the second story backing my assumption is also as a result of e-commerce, the presence of e-commerce. And according to the research by Statista, we see that the market is good. The global online market is projected to reach $350 billion by 2025. With a growth rate of 10%. Also, this is also highlighted by McKinsey in 2023 report, whereby e-commerce and luxury is also projected to grow specifically in China, and China being a major region for LVMH. So I anticipate the revenue growth rate of 10% is going to stand out. So another important story is also about the rising middle income in China population. This will catalyze market expansion, and Asia, including China, being fastest growing region in terms of revenue contribution to LVMH revenue. We saw that in 2023, over 30% of LVMH total revenue came from Asia. And also a report by McKinsey illustrated that China affluent middle class is projected to grow by over 30% by 2025. And that region being important to LVMH, which I project that LVMH is going to maintain its average of 10% revenue growth rate in the few coming years. So we saw that luxury industries are market dominated by leading players, and these are few players like LVMH, Kering, and Richmond. And we see that in terms of sales revenue for this luxury market industry, we see 56% of the sales come from these top 10 leading brands, and only 44% coming from top 90. And also in terms of profit, net profit, or maybe profitability, these leading brands also maintain a high profitability of 74% compared to the remaining 26, which is shared among the top 20. So that means that this company enjoy the brand loyalty from the customers and also the economies of scale. And also the other thing is also the other factor for that is key for this industry is also the China market, which is projected to grow which has been growing at 17% CAGR compared to 6% for the global luxury industry. So this is also fueled by the high income class. So and the last point is also about the shift to e-commerce. We see that the industry is witnessing a trend towards a reduced reliance on the wholesale channel, and companies are going to for e-commerce and online. So in terms of the in terms of the we see that the company saw a 3.7% year-on-year slight increase in the gross margin, although there was a big drop in net margin in the financial year 2023, that is quarter two. And this was a result of the investment in the minority associate. The company invested a lot in the minority associate shares, and their performance contributed to a drop in the net margin. So what about the consensus estimate? So also we see that we are in line, I am in alignment with the other analysts. From the consensus estimate, we see that over 66% of the analysts recommend buy, and 10 analysts recommend a neutral. So that means at least above average of the analysts see that the potential of this company having an upside price. So, and there is also an expected increase in the net margin from at least almost 18%, which is high in 2023, to about 19%. So that is about the consensus. Also about the revenue structure, we see that the company streams revenue from a combination of factors, with fashion and leather goods contributing almost half of the sales of the total sales of LVMH. So leather and fashion is a main revenue driver. So another, and also the second one being selective retailing, which is a strategy where luxury brands have dedicated stores instead of selling through the traditional departmental stores. Beyond the three major contributions, so we have also multi-channel distribution network, which fuels sales. And also, other than that one, we see that increasing price has been key to LVMH, and this is because of their strong brand and also customer loyalty. So I also use the fundamental valuation and also momentum and risk to try and understand the strength of the company. And I see that the company is ranked the top 40 in France due to strong profitability driven by high margin. And also the company is ranked the best both in price and fundamental momentum. So although the company is strong in fundamentals and momentum, the balance sheet risk is high, and this is because of the low current ratio and the high net debt to equity ratio. So, and these affect the overall ranking of the company to top 40. Okay. Also, another method that I use to try and understand the strength of the company is also using the world-class benchmark. And this I try to understand the company in terms of the profitable growth, profitability growth, asset efficiency, expense control, revenue growth, and expense direction. And LVMH has maintained a strong profitability and has been ranked number 2 for the whole period, except in 2020, which was ranked number 4. And I think this is because of the COVID-19. The company has also maintained a strong profitable growth, and has been ranked number 3 from the past 12 months. Although that ranking has been affected by the asset efficiency, which is ranked number 8 for the past 12 months, which is poor according to the benchmark, although okay. So I think that's about that one. So also the balance sheet, you see that the revenue is going to grow from 86, 153 to 142, 420. And also the company has maintained a strong net margin over the period, which has been growing from 12% to 15% historically, and it's going to grow from 15%, 174 to 21, 764. In terms of the balance sheet, the company has also maintained a good short-term asset. That is a current asset and also the current liability. And we see in terms of the current ratio is good. It's above 1. So it means the company has enough current liquidity asset to be able to cover the liability that are lower than 1 year. So I value the company using a revaluation, and using the price to book. The company is expensive compared to discretionary sector in France, Asia, and the world. So I did not incorporate this in my recommendation, and also I forecast that the return on equity to be around 25% by in 2025 estimate. Also I use the PE ratio, but this one also, the company looks expensive compared to the consumer discretionary sector in France and the world. So this does not provide a good valuation for the company. So this is the discounted cash flow model, and I use a market risk-free rate of 2.5 and a market equity risk premium of 7.5. And since the company has been a high beta stock, so I assumed that 1.1 times beta, and I forecast the capital structure to be 12.1%. That is debt to capital structure, and also this gave me a weighted average of 9.5 and a terminal growth rate of 3%. And this resulted into a target price of 928, which is a 12.1 upside from the current compared to the current price of 828. So I also carried out a sensitivity analysis to try and understand what if we have an optimistic case, and we assume that the sensitivity return an optimistic case of 11.5, it's 11.7 revenue growth rate until 2028, resulting in a target price of 938, which is slightly above our target price. Conversely, also you see the pessimistic case, which is in case we miss our target price of 10%, then it means that the sales, if it grows at 9.5, then this will yield a target price of 918, which is also above the current price of 828 euros. So, and that is the sensitivity table with the illustration. And lastly, we come to the main risk. So I understand that I recommend a buy, but there are some of the risks that also I need to, that might affect my target price, and main one being the economic downturn. The other one being the counterfeiting, and also brand dilution is a persistent, and also geopolitical tension and currency fluctuation. And also the last one is over dependence in China. So I see that China has been a great center of attention for LVMH. Therefore, since the risks are not strong enough, so I still recommend a buy with a target price of 928. Which is translate to a upside of 12%. So thank you very much.